Good evening, Soms. You are first tonight. Welcome. Good evening, Irshan. You are the second person to join tonight. Good evening, Sipo, Baloy, Leon. Good evening, JJ, EJ. Good evening, folks. Welcome to Thursday night Q&A. Let's see. Do my favorite part of the show. See everybody that comes in. EJ, JJ, RK, ME Electrical Maintenance. Good evening, Tundi. Good evening. Hello, Lauren. Good evening, Charles. Good evening, Rita. Welcome to you all. It's Thursday night Q&A. Please go ahead and ask your question. Let's see if I can answer something for you. Good evening, Mark. Welcome. Nice seeing you. I've been seeing some of your videos and you are doing well, young man. Congratulations. I did saw that you have a red eye the other day. I hope you didn't have an infection or anything. Ravina and Livia and Irene, good evening, everybody. TDK, good evening. I wonder if this is the same TDK that I've seen on a few times from before. Landelwa, good evening. Wazo, good evening. Hello, Nelson. Good evening, Lou and Siabonga and Pete. Good evening to all of you. Lal van der Linde, good evening. Well, as people are coming in at the moment, sorry about that. As people are coming in at the moment and we wait for the first person to put a question or make a statement or something like this. I see a lot of people are asking again about withdrawals from the two-pot system. And I believe that there is, well, there's really talks about it, that they want to put a block on the two-pot system. I think the realization has come through that too many people, good evening, Pete, hello. I think the realization has come through that so many people has withdrawn from the two-pot system that even though it might sound advantageous for SARS, they have come to the realization that people are going to have such a negative result in terms of their own pension fund in the future that if they keep on withdrawing that they won't be able to go on pension one day. And I'm really hoping that they are going to follow through on this and maybe reverse the legislation in terms of the two-pot system. Not saying it's going to happen, but I'm really hoping that it's going to happen because, gee, people have been withdrawing like mad. No matter how many people are out there telling people it's a bad idea, they keep on doing it. Anyway, so that's just something I threw in there. I thought that's something to get the conversation going tonight. Furthermore, I know there's a lot of people that's again in panic stations with regards to the war that's going on. So we live in interesting times, folks. We live in very interesting times, just putting it out there. Let's see, Irshan says, what is everything I can put into a trust to keep it safe? Well, Irshan, you can basically put everything you want and have into a trust. You can put every asset that you can think of into a trust. That is vehicles, houses, investments, bank accounts, businesses, what else? Anything, literally everything. You can put literally everything into trust to ensure that you have absolutely nothing in your own personal capacity. So a trust is absolutely a wonderful tool that one can use if you want to protect your assets and if you want to build a legacy. It's also good for estate planning because especially if you're going to put everything in trust, because when you pass away there is no need for estate to be done. Trust just keeps on carrying on even though the trustee or the beneficiary has passed away. Trust just carries on. So it's a very good tool that can be used, especially for people that are going to build up substantial assets. Let me just move this thing. I'm battling to see my own screen tonight. I do, however, want to mention that it is for people that want to build wealth and is very serious about building wealth. Very often people want to start trusts, but they never get more than basically the cars that they drive and the house that they have. And then I don't know if a trust is worth it from a cost point of view, because remember, with a trust, you have to do tax returns, you have to pay cost on a trust. Tax on a trust is 45%, so if you do not manage a trust well and manage the profits in trust very well, it could come back and bite you from a tax perspective. So a trust is a wonderful tool, but you must know how to use it, know how to manage it, and you must have, I want to say, a very good accountant and a very good lawyer with your financial advisor that understands how it works, if you're going to create one and then if you're going to make use of it, okay? Mark says 2-pot should be treated as endowment, one withdrawal per 5 or 10 year period. Mark, I'm going to disagree with you, mate. 2-pot should be not existing. I know what you're saying, right? I know what you're saying. Instead of having a withdrawal once a year, having one withdrawal or two withdrawals over a 5 or 10 year period will make it better. But what concerns me about that is that if you're going to do it like that, then all that's going to happen is people are going to draw a bigger amount in the 5 or 10 year period. I would honestly be very, very glad if this is the one law that was created in South Africa, if it gets turned around and they say, okay, listen here, we go back to the old system. We're not going to allow people to draw from the 2-pot system anymore. I think that will be a humongous win for all South Africans. I know for all the South Africans that are drawing money out of the 2-pot system, they're not going to think so. And they're going to jump up and down and scream and complain and everything. But if we want to protect people against themselves, I think the 2-pot system should be reversed. Any case, that's my 5 cents, and I know I'm going to get a lot of people that's going to say, you don't know what you're talking about, we need the money, wada, wada, wada. Any case, let's move on. Customer support, that's an interesting name. I wonder, it's just too small, I can't see. Okay, customer support says, how much work is it to do a Section 14 transfer on an RA? It's not really all that much work, to be honest with you. A Section 14 transfer on an RA is actually reasonably simple. You have a retirement annuity with company A, and you take a new retirement annuity with company B. You complete a document with company B that says we are transferring the money from company A to company B. It gets submitted together with the proposal documents, and company A gets informed about what's going to happen. So it's pretty much easy from an admin point of view and from the amount of administration that has to be handled by the client and by the advisor. It takes a long time, however, because behind the scenes, the two insurance companies both have to communicate to SARS. They have to send certain documentation and information to SARS. So behind the scenes, there's quite a bit that happens, and for all intents and purposes, a Section 14 transfer should be finalized within literally 2 weeks, apparently. Oh, no, I'm lying. 4 to 6 weeks. Sorry, I was thinking of something else now. 4 to 6 weeks. But we find that sometimes it takes 4 to 6 months. The biggest problem with Section 14s is not the amount of work that's involved in doing the transfer. The biggest problem with Section 14 is the cost for the client. Because company A, where he has his current retirement annuity, is going to penalize him for taking his money and moving it to company B. So depending on how long that retirement annuity has been in action, how long it's been going, the cost could be pretty substantial if that RA hasn't been running for a long time. And then remember, with company B, you are going to pay new costs because you're taking a new retirement annuity. So it's a bit of a double whammy. And that's why I normally say to people, if you want to do a Section 14, first go and make 100% sure that it is going to be to your benefit. And that can be done with calculations and looking at the various portfolios. It is normally, in my opinion, better not to do a Section 14, but just to do a portfolio change with the company you are with. There are circumstances, trust me, I've seen it. There are circumstances where it's absolutely 100% to the client's benefit to do a Section 14 transfer. But it's not always like that. Okay, I hope I answered you there. I expanded a bit because I haven't had a question on Section 14s for a very, very long time. As a matter of fact, give you an idea, on Section 14, well, with any retirement annuity, you are bound by Regulation 28 as to which portfolios you could actually be invested in. And we actually came across a situation just the other day where we wanted to change a company's portfolios with a specific company that she has her retirement annuities with. The problem was that the company did not have asset swap capabilities. So asset swap capabilities is where the investment company that you're with, they have to get approval to do asset swaps and therefore take your money out of South Africa into international markets, invest it there, and then when you want the money back, they do the asset swap back. But you have to have approval for the amount of funds for clients that you as a company can take out offshore. And this company did not have the capacity. And suddenly the client was in a situation where the client had to be happy with having their investment only in local funds. And because of that, and because of the client could now not get their 45% allocation in global equities, it made sense to say, okay, well, it's time to do a Section 14 for you. Based on the fact that we do believe from what we see in the portfolios that we offer clients, that the client would get a substantially better growth. And then taking into consideration, once again, that cost, it still made sense for the client to do it. So that is just by the by extra on top of your question. Zero Cool says, my provident fund lost 200,000 last month. I could manage the money better. Zero Cool, you cannot manage the money better, and don't worry about the 200,000 rand that it is dropped. Yes, I know you think I'm out of my mind at the moment saying this. Remember, there is a war happening in Iran, okay? And that war has an influence on all stock exchanges. So the war has an influence. Donald Trump and his need to have a weaker dollar has an influence. All these things have an influence. And that's part of markets. Markets keep going up and down, up and down, up and down. And on short-term periods, you are going to have losses, especially if you have, if you have exposure to the market. Now, if you are invested in any investment, provident fund, endowment, retirement annuity, whatever the case might be, and you are in portfolios where there is exposure to markets, you are going to see a drop in investment value in the short period of time. But it's the short period of time. Investment is not meant as a short period thing that you have to monitor on a daily or weekly or monthly basis, and it must always go up. It can't happen, okay? So as long as you are in your provident fund and you have, I would say, anything from 3 months to 30 years left, you don't have a problem. It will recover. And I promise you it will recover. And the reason why I can promise you it will recover is if we look at what's happening there, it's almost the same situation as what we had between Russia and the Ukraine. When Russia and Ukraine started their war, stock exchanges also started taking a dip. And people's investments also started taking a dip. And for the first 3 or 6 months, that's all anybody could talk about, was how this war is affecting the stock exchanges. And now, 4 years later, Russia and the Ukraine are still having their war and they're still going on, but we've had 2 of the best growth years ever, locally and internationally. See, as soon as the fear is gone, as soon as the madness has been coped with, so to speak, as soon as people come to the realization that, listen, this is not the end yet, it's just another blip in the system, then people start getting back into the market. They start buying again. The market starts recovering and people start buying again on value, not on short-term fear. So Zero Cool, I can promise you, I can guarantee you, I'm willing to guarantee you and to make you a bet. You cannot manage your money better. And I'm willing to put my head on a block and say, if we were to come to you and say, okay, let's see your Provident Fund. Okay, there's R1 million or 2 million rand or 3 million rand in your Provident Fund. You now start managing your own Provident Fund, and we will keep on managing your Provident Fund. I bet you within 2 years, you are going to fall behind. Maybe not even that long, but I'm using 2 years to give myself a bit of time. I bet you're going to fall behind in terms of your own personal growth. And I bet you 5 years down the line, you're going to say, thank goodness, the money that I'm managing is actually not me managing it, but somebody else. All I'm going to say is you don't worry about it. Don't stress about it. If it's short term, don't worry about it. Okay, let's move off that subject, because I get very worked up when people say they can do better than what I know they normally can't. Hi, Corne. Runesh says, hi, Corne. Do all ETFs pay out dividends? Just selected ones? No, it's just selected ones, Runesh. Not all of them pays out dividends. And I think we have to understand as well that the ETF and the dividends pays out within the ETF. Okay, it's very seldom that the ETF actually pays out to the investor. It's normally only when the investor wants to withdraw his funds or request for something like that is done like this, because an ETF at the end of the day is a fund where everything is managed within the fund by the portfolio manager. Okay. Dole says, lost also a lot of money on my living insurance. Dole, don't worry about it, mate. Just don't worry about it. If you've got a living annuity, okay. I've got a client that has been umming and ahhing with regards to his pension fund money, on whether he should leave it in the living annuity where it is currently, or whether he should move it onto a guaranteed annuity. And he has the same argument. I've lost money. And I think his was about 243,000. We went and we did the calculation just yesterday. And the loss that he's had is 1.81%. It's very little. And it's not a loss. The only time that you have lost money on the investment is the day that you withdraw your money before it's recovered. So if you've got R1 million and you put it into your investment, okay, and the market takes a dip and it goes down to 800,000 and you withdraw that money, then you've lost 200,000 rand. Okay. But if you've got R1 million invested, the market goes down to 800,000 and you just leave it there, you haven't lost anything. You only lose when you withdraw. And we've seen it through all the world wars, through the financial crisis, through COVID, through everything. The funds recover. So even if it's gone down to 800,000, just hang in there, let the portfolio manager do what they have to do. And one of these days, you're going to be back at 1.1 million rand. Then you haven't lost anything. You've actually improved your investment from $1 million to 1.1 million. You only lose money on investments if you withdraw it at a time that there's a downturn. Chill. So even on a living annuity, your living annuity might have gone down. That's fine. It's the short term. Depends on what happens over the long term. How well or how badly your living annuity is going to do. Do you know what type of assets conveyors use in trust accounts? I made so much. No, I have no idea what assets conveyors use in trust accounts. I know that lawyers that have trust accounts, it's normal bank accounts. That I know, because they have to be able to pay out the interest to the clients. But no, I have absolutely no idea what assets conveyors use in trust account. All I can think is that they can only use, or they can only have a savings account as well. Okay. What was that? I don't understand. In any case, let's go to the next person. Some interesting names coming through again. Okay, whatever that is. Okay, Eugene O'Neill says, I have about 500k. Should I put it into my old mutual RA or endowment? Current contribution is 5k per month. So Eugene, okay, here's the thing, Eugene. I wish I could tell you straightforward, listen, it's going to be based on your RA, it's going to be based on your endowment. If you put it into your retirement annuity, okay, then what you get is the tax rebate. Now, you cannot get a tax rebate on the full 500,000 because we are limited to 27.5% of our gross income or 430,000 per year. So you can put the 500,000 in there, and let's say you've got no other retirement contributions of retirement annuity, pension funds, whatever, and your income is sufficient that you can deduct 430,000, well, then you can deduct that this year and 70,000 next year. And that will give you a very good return on your investment. But it's highly unlikely for anybody in South Africa that they can invest 500,000 rand in retirement annuity and get the tax deductibility over the next 2 years. So then it will roll over to retirement, and at retirement you will get not only 550,000 tax free, but even whatever of this 500,000 you did not get a rebate on. So from a tax perspective and the rebates you're going to get, excellent place to put it is the retirement annuity. The question is, do you actually need that retirement annuity or that rebate, that tax rebate? If you need the rebate for your own tax calculations and planning, whatever, it might just be the best place to go and put it. But if you do not need that tax rebate, it might not be. And why not? Because if you go and you put it into your endowment, okay, then you do not get the tax rebate, but at least in your endowment you could go and choose a portfolio that has a lot more exposure to equities. So what this means is in your retirement annuity you have to have your investments invested according to regulation 28, which means a maximum of 75% of your retirement annuity can be in equities, so shares on the stock exchanges. Versus the guy that's got an endowment, he can have an endowment in a portfolio that's got 100% in shares. Now shares has always proven over time that it is the best growing asset. You can go and check anything anywhere. Over the long period of time, shares always outperforms every asset class. There is just no two ways about it. So if you've got an endowment where you can put 100% in shares, and you've got a retirement annuity where you can only put 75% into shares, it stands to reason that the endowment over a long period of time is going to outperform the retirement annuity. So, if I do not have the need for the tax benefits in the retirement annuity, then the endowment is most probably going to be the best place to invest my money from a growth point of view. But not only that, when you get to retirement, okay, if you've got a retirement annuity and you've got R1 million in your retirement annuity and you've got an endowment, you've got R1 million in your endowment, and let's say you're going to take, bad example, but let's go with it. You're going to take 10,000 rand as an income from your retirement annuity and 10,000 rand as an income from your endowment. The 120,000 you get from your retirement annuity is now taxable in retirement. So you're going to pay tax on that money in retirement because it comes out of the RA. The 10,000 rand you're taking from the endowment, so that 120,000 rand is completely tax free. So here's the simple exercise. Let's say you've got both these products and you take 120 and 120,000 rand. Now because of the 120,000 rand, you're on an 18% tax bracket. That means you're going to pay 18% on the retirement annuities, 120,000 rand income, you're going to pay 18% tax on that. But on the endowment, because it is after tax money, you don't pay any tax on that. So you're getting a 20,000 rand per month income only being taxed on 10,000 rand, and therefore your effective tax rate is not 18% but 9%. So Eugene, I know I've taken a bit of time to explain this in a bit more detail, but I hope you understand, or you can see how it is almost impossible for any financial advisor to give an answer based on a question like that. And even based on everything that I said now, even if you give me another 20 statements tonight about this RA endowment, the chances are very likely that I still cannot give you proper advice, because I need to understand certain personal aspects of your life with regards to your income and expenses, your assets, your liabilities, and very much your personal preferences, your family situation, the thing that gives you peace of mind. And only once I understand you as an individual and your personal financial situation, only then can I really say, okay, Eugene, my personal opinion is you have to put your 500k in that investment or in that investment. As a matter of fact, it might actually be to your benefit to put a portion into your RA and a portion into your endowment. That's an avenue we haven't even explored in this little explanation that I've given you. Okay, Eugene, so I think at the end of the day, mate, if you really want to know what's going to be best, contact me and let's set up an appointment so that we can give you some proper advice, okay? Moin Wonderland says markets are taking a pounding. Yes, and some markets are, but it's really not. Oh man, I looked at the markets 2 days ago. They are not taking this humongous pounding. There's some asset classes, okay, that's really taking a bit of a pounding, but the markets are not really taking such a pounding. And the only people that should be concerned about markets taking a pounding is people that tries to time the market, number one, and people who wants to be traders, that wants to trade on equities and stocks like that, and wants to buy and sell in order to chase the biggest possible profit. Now, if you are a trader, okay, and markets are taking a pounding at the moment, trust me, there is a lot of specials there that you can go and buy and make a lot of money. But if that is what you want to do, go and do it on your own. And financial advisor like myself will never step in and say, yes, see, let's go and do that. It's just, man, it's too much stress. I want to sleep at night. So don't worry about markets taking a pounding. Folks, it comes back to the same thing every time. If you are investing and you are an investor, you have to choose. Am I investing for a long period of time for specific goals that I have in the future? Or am I a speculator that wants to buy and sell on an ongoing basis and try and get the best possible profit? If you are the speculator, financial advisors are not the right people to speak to. You have to do your own thing. I can almost promise you that even if you go and speak to stockbrokers, they're just going to laugh at you and not even try and help you. Because even those guys know that every stock they buy and sell is a gamble that they're taking. They're gambling against it working out. But if you are the person that says, I'm investing for a long period of time because I want to buy myself a new house in 5 years with the money that I've saved, or I'm buying myself a swimming pool for my house in 3 years' time, or I'm buying myself an international holiday in 10 years' time, or I'm actually investing for my retirement. If you're that type of person, stop worrying about the markets taking a pounding. It is of absolutely no concern to you because you're investing for the long period of time. And that which happens now on the short term it's gonna have no influence on you. The only people it has an influence on is the people that now look at the markets, go, oh, go pull my hair out, it's going nuts, and they withdraw their money. That's the only people. And you know what? It happens through every little crisis that markets go through. People start withdrawing their money because they had $100 and then the market is down by 20 Rand. So they draw the 80 Rand back and they hold it, they put it in the bank account. Oh, I'm so scared. And then when the market starts recovering and the market gets to 95 Rand, then they put their money back. Then they've already lost or missed the recovery. So just don't worry about it. If you're going to worry about it, you're investing the wrong way. You are not trying to understand how investments work. Moin Wonderland. I'm not trying to take you out. I'm just really trying to help you to relax, sit back, be calm, not to worry. I don't care when markets are going to recover, Moin Wonderland, to be honest with you. You're saying, when do you think markets will recover? I don't care. Markets will recover when the panic that there is at the moment starts to dissipate. That could be in a week's time. I don't know. Iran finds a bomb to bomb USA and Trump goes into his hole and it's over and done with, or vice versa. Then it's over in a week. They drag it out for another 6 months. Then it's over in 6 months. Just hang tight. Don't withdraw your funds. Don't panic about it. What? Mintsi says, what if the market doesn't recover, Corneille? Mintsi, it will recover. Okay. Do yourself a favor, folks. Do yourself a favor. Go and type into Google tonight Dow Jones chart or JSE chart. Okay? Just that. And then you go and you will see it gives you 1 day trade, 5 days trade, 30 days trade, 3 months, year, it carries on. And then at the end there's one that says maximum. And then you do yourself a favor. Don't look too hard at anything from the 1 day to the 6 months. But go and look at 1 year, 3 years, 5 years maximum. And you will see that through all times, from the day that markets were born, through all times, markets have always recovered. Sometimes it takes a month or two and it's good. Sometimes it takes 18 months before it's good. But it always recovers. So trust me, it will recover. You as the investor must just stay patient, not worry too much, and manage and plan your investments in accordance with the time period that you've got left. Okay, don't make any sudden moves, don't panic, don't withdraw your funds, it's going to recover. Zero Cool says, I'm 36 and want to retire by 45, tired of working, I have a net worth of 2 million, is it possible? Zero Cool, what do you want to retire with, my good friend? Do you want to retire with an income of 1,000 Rand a month? Because if that's what you want to do, then yes, maybe your money is going to be enough. You've got 9 years left, you've only got 2 million Rand at the moment. You have to make provision from the age of 45 until the age of 95 for 50 years of income. You are going to be retiring like an absolute pauper. You're going to live, maybe not even in a shack. You're going to be scratching in dustbins very soon for food. So no, I don't think that you can retire at the age of 45. Not with a net worth of 2 million, unless, like I say, you are willing to live on the absolute bare minimum. So if you're going to live next to the sea, you're going to catch your own fish every day, not worry about a medical aid or vehicle or nice food or holidays, yeah, then I suppose you could. Personally, I don't think in the world that we are staying in, that the amount of capital that you have now and what you will have in 9 years' time will make it at all viable to retire at the age of 45. Go and look for yourself, okay? Do yourself a favor. Go and have a look at what your current income is, okay? If you've got a net worth of 2 million at the age of 36, I bet you are not living on a monthly income of about 10,000 Rand a month unless you've inherited money. Okay. But let's just say that it is 10,000 Rand a month that your income, you have inherited money and that's why you've got the 2 million. Now go and think for yourself based on your current living conditions, how comfortable you are. Are you satisfied with how comfortable you are? And if you are, and you say, this is fine, I just want to be this comfortable for the rest of my life, then go and think for yourself, can I live on half of 10,000 Rand a month for the rest of my life? Because based on the capital that you have now and what it's going to grow to, that is the maximum income that you will be able to take when you get to the age of 45, and then you are still not sure that it's going to last the rest of your life because it's too big an income. So Zero Cool, I do not think so. the math just does not work in your favor. Sorry to say. Payne says, Mincy, the market always recover. Thank you, Payne. Glad I've got somebody in my corner tonight. Feels like everybody is against me and against the markets and scared and worried and everything. Okay, Payne also says, history has taught us that the market always recovers. That's 100% correct. Folks, just to put it in perspective, okay, just to put it in perspective. When we went through COVID in 2020, okay, the market crashed. That's what everybody calls it when the market plummets like that. The market crashed by, depending on what sector you're in, 35 to 40% within 2 weeks. Just went wow, plop. Nobody had a chance to move their funds. How long did it take the market to recover? 6 months. 6 months later, March it went like this. August, so actually it's 5 months. August, the people that were crying in March because they lost their 40% were back up to their 100% plus an extra 10%. 6 months and the market recovered, and everybody forgot about the market crash that we had because of COVID. Longest time that the markets ever took to recover, okay, was 38 months. And if I remember correctly, that was after World War II. 38 months is 3 years and 2 months. So if you are close to retirement, okay, then yes, I can understand that you could potentially be very concerned about what the markets are doing. But that's just the way it is. We are not, I don't believe we are in a market that is doing so badly or crashing so badly that it will take 3 years to recover. And I deal with people that retire on a daily basis, that we did their calculations 3 months ago and now we're doing their calculations again, and we did not get the return on investment in the last 3 months that we were hoping for, but the figures are still sufficient to give them what they need, even though we didn't get in the last 3 months the amount of growth we were hoping for. So please stop panicking about the market. I always say to people, especially when they start talking politics and they want to tell me that, yeah, but Trump is doing this and this guy is doing that, and no. I say, so what? Who cares? I can't do anything about what those guys are saying or doing. I cannot, nothing that I say is going to have any influence on the decisions those people make. So I concentrate on what I can do for myself, my family, my close ones. So that's what I want to recommend to you. Don't worry too much about what the market is doing, because you can't do anything about it. Don't worry about what Trump and his commodities are doing with this war. You can't do anything about it. What you can do is you can look after yourself and your closest loved ones. And that's the best that you can do and that you have to do. Just don't worry about the rest. The world will sort itself out. We thank you, says, what's your investment advice for someone who's 25 years old and able to invest 1,500 Rand per month? Well, that's a very nice way to start. So we thank you. The first thing is I will say, if you don't have a tax-free investment, that 1,500 Rand could very well be the best investment that you do in tax-free investment, especially if you are willing to invest it and leave it until you are 55, 60 years old and it's for your old age. Okay? I would say as a second alternative, if you have a tax-free or you don't want a tax-free because you don't want to leave it that long, the second alternative would actually be also a long-term investment, that's a retirement annuity, so that you can get the tax deductions of the premiums, once again for retirement, if that's your intention. If your intention is not retirement and rather I want to invest for a certain period of time, then I would say, depending on your income, I would either do an endowment recommendation or a unit trust recommendation. If the income that you are earning puts you in a tax bracket that's higher than 30%, endowment. If you're in the income that you receive puts you in a tax bracket of lower than 30%, unit trust. And that is a short, what do they call it, decision tree way of deciding where to invest the money. But I come back to what I told the previous person earlier with the 500,000. I cannot give you a definite answer as to where would be the best place to put your 1,500 rand. I don't know you. I don't know what your income is. I don't know what your expenses is. I don't know what your assets is. I don't know what your liabilities is. I don't know what your family structure is. I don't know whether you've got money in emergency funds. I don't know if you've got other financial dependents. There's a lot of things that I don't know, and therefore I cannot give you a proper answer. The one thing I can tell you, even if we look at this little decision tree, is start. Just start. That is the most important thing. If you have never started, even if you put that 1,500 rand for the time being into something like a money market or a savings account, then do it. Just start. Get to that disciplined place where you actually put the money away and you start teaching yourself to invest it on a regular basis. That is, my man, my woman, whoever I'm talking to, that is the best thing to do, is just to start. The amount of money is a nice amount to start with, but it is not such a big amount that it's going to have a major impact on the decision you make now 12 or 24 months down the line. So if you just start at this stage, okay, and you start putting the money away, then you've got plenty of time in the next few weeks or few months to actually sit down with a financial advisor that can do the planning in order to help you determine what's the best product and then put it into that product. So just start. That's the main thing. After that, as time goes by, you can choose or you can decide which product is going to be most favorable for you. Okay. Glad that you're looking at investment. That is already a very good thing. For somebody that's 25 years old, fantastic. Most 25 years old just want to spend their money on booze and parties. So congratulations. I'm taking my hat off to you. Mincy, you are asking how do people get into contact with me? Oh, in my profiles, okay. And when I say in my profiles, TikTok, Facebook, Instagram, in all of them, and on my website is my contact details. You can go and contact me there. I will do what I do normally on Thursday evenings. And oh, there we go again. I'll just put in my WhatsApp number here as well. 060-541-4685. Okay. So there's my WhatsApp number. I've just put it in the chat. You are more than welcome to contact me via WhatsApp, and myself or Mark Harris from my office will make contact with you, and we can then set up an appointment for you. Okay, so there you go. Minchi, it's in there. Eugene says, thank you, gives me a good idea. I'm glad to hear that, Eugene. Very happy if I've given you some guidance, but once again, sir, please take note, this is not financial advice. I'm not telling you to put it in a specific place, because I want you to go and get proper advice, to go and get a proper planning session done. And like I always say, if you are not happy, okay, with the financial advice that you get from the first advisor you meet with, get a second opinion, get a third opinion. Financial advisors, or rather when you have a sickness, people always say go and get a second opinion. If they're not happy with the first doctor that wants to do knee replacement, go and get a second opinion. With financial advisors, exactly the same. Go and get a second opinion. Let a financial advisor earn his keep by giving you proper financial advice. Okay. Owl says, well said, bro. Thank you very much. I will appreciate it, mate. Sky says that is true, 100%. Jameson Crossfield says, is tax-free at banks? Is tax-free at banks have good returns, or is it better on other institutions like Sanlam or USA? Okay. Jameson, my mate, always better to have your tax-free investment through an insurer like Sanlam or Old Mutual, and by making use of portfolios in USA or UK portfolios, Absolutely. You're always going to do better than what you're going to get at the bank, because the savings account at the bank gives you a fixed interest. And it doesn't matter if it's a tax-free, okay? Doesn't matter if it's tax-free or another bank savings account. What happens at the bank, if you make use of a savings account at the bank, okay? The bank says to you up front, give me your money. I will give you a set interest. And for small amounts, it starts like at 3 and 4%. But let's say the bank says to you, I'll give you 7% interest per year. So the bank takes your money, they give you 7% interest, you're very happy. What does the bank do with your money? They actually take your money and they go and invest it with Sanlam or Old Mutual Liberty. And they get from those guys 9 or 10% return on investment. So then they give you your 7% and they pocket the other 2 or 3%. Now when you take it to the insurer, okay, the investment house, you invest it through them, then the investment house says, give me your money, I'm going to charge you a fee. And I'm going to take off, what, 2% or whatever the case might be. But whatever I make, I'll give you everything. I'm taking my fee. So now, if you invest your money with that insurer and they make 12% return on investment, they take that 2%, they give you 10%. You're 3% better off than what you were at the bank. So you're getting all the growth that the bank would have gotten for doing exactly the same thing with your money. So no, it's always better to do it with an investment house. I know that there are banks that has investment products similar to what the Old Mutuals and the Sanlams and the Liberties can offer you. But normally when people ask a question like this, it's because they want to make use of a tax-free savings account and not a tax-free investment through the bank. Okay. The new fight of life says, Correa, yes, the markets was clapping me this week, made some small change trading well though. So basically you like to trade, you like to gamble a little bit, it's all good and well. Now the trick is, okay, because you've actually gotten in a bit late. You know that. I don't, it's neither here nor there. You know that. You should have gotten in on well a number of weeks ago when this all started, and slowly but surely they started putting the screws on oil. So you know that you've already missed a few weeks, okay? Let's just agree upon that. But you've gotten in now and you are seeing some growth. So here's the trick now. The trick is when this thing turns around, that you get out of there before you start losing again. Because if you're buying at 100 Rand at the moment, okay, and let's say it keeps on running for a little bit and it gets 200 Rand, you've made 100% profit. Great, fantastic. Now suddenly market makes a little bit of a dip. It goes to 180. And people go, yeah, but the crisis is not over. I'm just going to hang on a little bit longer. And then they hang on, tomorrow it's 150. And they're like, oh shit, maybe I should have, I'll hang on one day. And then, whoop, it's 120. And then they climb out. And that's the trick. It's timing the market, because that's what you're doing. You're timing the market, or you're trying to time the market. So, new fight of life, try it, my brother. Keep on going with it. I do not have the guts to do that stuff. I know there's people that are brilliant with it, and if they are, fantastic, but I do not have that guts. I won't do it. And that's why I make use of portfolio managers. Portfolio managers kind of does what you do at the moment. The only thing is they do it with big teams that does lots of research, and they buy and sell on a very regulated and structured way with a very specific plan. They do their buying and selling. In any case, Sky says, hi Correa, I have 10 million in Absa Invest Tracker investment. Should I move it? Sky, I can't tell you because I honestly don't know what the Absa Invest Tracker investment is. It doesn't sound like a savings account, okay? So if it's an investment through Absa, and that Invest Tracker investment is linked to a specific portfolio, then I would assume that if it's a good portfolio, you're getting good growth. The question then is, the second question comes in is, if that tracker investment is giving you good growth, is it in the form of a unit trust or a life wrapper and endowment? On 10 million rand that you have in the bank, chances are very good that you are in a pretty high tax bracket. And if that money is therefore in a unit trust, maybe it's not so good a place to be because of the capital gains tax that you're going to pay, and you should be in endowment. So, should you move it? Is going to depend on a couple of things. How well that portfolio is doing at the moment. And like I say, I don't know that portfolio, so I can't tell you. And number two, what structure it is, unit trust or endowment. And that structure is, and the investment that you should have is more determined by your tax rate than anything else. So once we know those two, then I can tell you, yes, I think it's a good idea to move, or no, just keep it there. So Sky, you will unfortunately have to take my WhatsApp number and contact me as well, because we need to have a discussion before I give you a straightforward answer, okay? Namgol says, happy to hear that markets always recover, because right now I'm panicking. Don't panic, Namgol, don't panic. It's really, really not necessary, I promise you. Yeah, I know there's people that's going to say, yeah, easy for you to say. You don't need your investments until you retire in 5 or 10 years' time. I have to retire now, so I'm panicking now because I'm going to get less out. Trust me, if you are at the point of retirement at the moment, and even if your portfolio has lost a little bit of money, if your structure that you're going to put together, the products that you're going to take out, is right for you and in line with your own risk profile, even though the funds have come down, you still don't have to worry, because you're going to move it from this product to that product, same funds, and you're also going to have the recovery. Don't worry about it. It's really not the end of the world. Okay, Dole says, what would you say is a decent pension in your opinion? Dole, I know this is a bad way of putting it, but I always say, how long is a piece of string? Okay. So Dole, if you want to retire, okay, and you want to retire with 5,000 Rand per month as an income in today's money value, 2 million is most probably going to be more than enough for you. Because 2 million will buy you a 5,000 Rand income with a bit of escalation for the rest of your life if you retire at, say, the age of 65. But if you want to retire and you want 100,000 Rand a month, then what are we looking? Now we're looking at about 40 million that you need as a good pension fund. Also at the age of 65. If you want to go earlier at the age of 55, you need even more. And the reason we need more is because you're going to be in retirement for 10 years longer. Because if you're going to die at the age of 80 and you retire at the age of 65, you've only had to make provision for 15 years. But if you retire at 55 and you live to 80, you have to make provision for 25 years, so you need more money. So Dol, there's no straight answer on this, because it all depends on you as an individual and what your dreams are for the future, what your goal is for the future. It's only once we know what that is, and once we know in what your retirement income need is, that we can tell you how much capital you're going to need. And it's not that difficult to calculate. Basically, what people need to do is they should take their monthly budget and they should say, okay, if I look at my monthly budget, let me take off all the things now that I won't be paying anymore when I'm in retirement. So when I go into retirement, I should not be paying a bond anymore. I should not be paying car finance anymore. I shouldn't have credit card debt anymore, etc., etc. So once you take that off and you say, okay, my monthly expenses now is 100 Rand, but if I take all of this off, my monthly expense is 80 Rand, then it's a reasonably good indication of what you're going to need in retirement. And then we take that and we say, okay, let's project this 80 Rand into the future. This guy is going to retire in 25 years. What is that in Rand value? In that stage, what capital do we need to give him that Rand value? And then we tell you what a decent pension is. Okay, Dol? Neapolitan, goodness gracious, how do you pronounce it? Okay, does lifetime limit of 500k include returns or is it contributions only? It's contributions only, okay? If it was not contributions only, it would not be worth calling it a tax-free investment. Tax-free investments, the 500,000 is just your contributions. If it included returns, there would have been a major problem because you will reach your 500,000 a long time before you've actually contributed 500,000. And then you will surpass 500,000, then they will tax you again. So no, 500,000 lifetime limits is only your own personal contributions. That's what makes a tax-free plan so brilliant, because if you started early, especially now with the annual contributions, that's 46,000 Rand, you can literally fill that up within 11 years. If you leave that for 30 or 40 years, you're going to end up with 9, 10, 11 million in your tax-free plan, everything tax-free growth. That's what makes it tax-free magic. What's your take on using platforms like Easy Equities? How is their fees for you? I don't know what the fees is, to be honest with you. I have looked at Easy Equities because so many people talk about it. As an individual, okay, if I was not a financial advisor, I would not make use of Easy Equities, because as a financial advisor, I know how to recommend, what to recommend to people in terms of type of product they need to take, what the tax benefits are, all of that stuff. So all of that I understand. So if I make recommendations to somebody, I know that I've given them the best possible product for their personal circumstances. If an individual goes to Easy Equity, they have to make all those decisions themselves. They have to decide on the product, they have to decide on the portfolio, they have to make all those decisions themselves. So if they pick right, congratulations, you've hit the jackpot, because your fees are going to be a bit lower than what it would be via a financial advisor. But if you pick wrong, then 10 years down the line, you're going to come to realization that, hell, I was in the wrong product and I was in the wrong portfolio that I picked on this platform, and now I only got 7% or 8% growth, where if I did the right thing, I could have had 10 or 11 or 12% growth. There are many of these platforms, and I say to people, go, use it, make use of it, absolutely. At least you're investing. At least you are investing. But personally, I don't think that those platforms are the best option for individuals, especially for individuals who do not try and even understand the basics of investment. There are so many individuals that says, I'm going to invest my money through Easy Equities because my mate told me about it and it's low cost and I don't have to pay a financial advisor, and I'm going to put my money in, what did he say? What was that portfolio again? Oh, I'll figure it out. I'll ask you tomorrow. They have no clue what they are going to invest in, no clue what portfolio they're going to use, because they just heard it and all they think about is the saving that they have in, I don't have to pay a financial advisor. And very often that is cutting your nose to spite your face. I often say to people when we talk, because people always ask about cost, I always say to people, what would you prefer? Would you prefer to pay the low cost of 0.75% that a money market fund charges, but you know that the only growth you're going to get is 7%, because that's what the money market gives, doesn't give more? Or do you prefer to pay the fee of 2.4% that a global equity fund charges, but the return is 14%? 7% money market return, 0.75% cost, walk away with 6.25. Global equity fund, 14%, 2.4% cost, walk away with what? 11.6%? I'll gladly pay that 2.4%. So when it comes to something like Easy Equities, absolutely, use it. But I would not recommend that to people. I would recommend that people speak to somebody that can give them good financial advice. Let's see who's next year. Guy says, oh, okay, you guys are having like a conversation. Gents, ladies, I see we finished. Okay, let me quickly run through the last few. This is going to be short answers, quick fire, because I want to go and grab supper. Corey, if I want to invest now, what do you suggest? An endowment, a unit trust, have a few endowments. GK, back to the thing of earlier, if I don't understand your circumstances, I can't really give you an answer. What I can tell you, it's going to depend on what your income is, sir. If your income gives you a tax rate, a personal tax rate of more than 30%, okay, I will still go with the endowment options. If your tax rate is less than 30%, I might consider the unit trust options. That's just from a tax perspective, but we haven't talked about liquidity and stuff like that. So that's a quick guideline that should give you 60% of your answer. The other 40% of your answer lies in all the other information I need before I can give you proper advice. So I can't give you a straightforward answer. Let's see who's next. Jameson, is tax-free at banks good or Sanlam good or USA? You guys? Oh, I've answered this one. I hope you listened, but I did spend quite a bit of time on that one. Namgal says, so would you say invest is not a DIY? No, Namgal, it's like anything. I don't think painting is a DIY. I don't think servicing your own car is a DIY. I don't think diagnosing yourself with if you're sick is a DIY. Investing is like all those things. It's a professional job. I always try and explain it to people like this, and I say, if you've got the sniffles, okay, you're not going to run to the doctor. You're going to buy yourself some Advil. I don't even know if it's called Advil. You're going to buy yourself something at the doctor to dry up your nose and maybe have a Strepsil for the sore throat. And you're going to use that for 2 or 3 days and see if you get better. And if you get better, fantastic. Over and done with. But if you get worse and worse, and now the sniffles becomes a cough, and it becomes a sore throat, and it becomes a sore chest, you're going to see a specialist to get it sorted out. The same with your car. If you need to do an oil change, you'll most probably do it. Or if you need to rotate your tires, you can lift it on a lift and you can do it. But when it comes to the actual service of your car, unless you understand how to do it, you're going to take it to a mechanic. That's the same with investments. It's DIY to start with, if you want to. But at the end of the day, it's a specialist job. So no, I don't think it is DIY. Hi sir, which investment is good for investing a sum of 2.5 to 2? Malokesh, you've come in late. I've answered this question about 3 times tonight, mate, because people have asked exactly the same question, but in 3 different ways. So I'm going to tell you the same as I told everybody. If I do not know and understand you, your circumstances, your needs, I can't give you a proper answer. So you're going to have to set up an appointment with a trusted financial advisor and let them look at your entire situation before they advise you. There's my WhatsApp number. I've just scrolled past it. Do you have any opinion on Nasdaq 100 from Satrix? I think it is a very good fund. That's all I'm going to tell you. I don't think it is the be all and end all, but I think it's a reasonably good fund. I like other funds more. Is true market crash once 10 year period? I won't say it's once every 10 years. Sometimes they come quicker, sometimes they take longer, but yeah, they always recover. My portfolio trust is a bad idea. My portfolios are very 1980s. A trust is a bad idea. Cheeky gorillas, if your trust is a very bad idea, then it's just because you don't know how to manage a trust, my mate. Sorry to say that. Ask the queen, why are you panicking? Is it because of misinformation? Stay steady, stay humble. Thank you, Cheesy Gorilla. I like your comments there. Sean, Corey, you're a legend. Obut, love your work. Thank you for sharing so much information for free. Sean, it's a pleasure, mate. If it's of value to people, I'm happy. Absolutely. Koketso, hi, we have started investment club aiming to free ourselves in the future. We just made 74K. Congratulations, Koketso. I hope that your investment club is taking some good advice and that the people in there is knowledgeable. Very important. Champ 17 says, what's your take on government bonds? Are they any good? I don't like government bonds, Champ. I really don't. I think it's crap. I know not everybody agrees with me. I don't like government bonds. Government bonds come with a set interest rate that they're going to give you back, and that interest is taxable once again. I'd rather put my money into a portfolio where there's shares. We want to make millions in 5 years. Well, if you've got the right investors, you've got the right plans, then you will do it. Congratulations. I have 50k. Which platform is good for return? Billy Artsy, I've answered this thing 3 or 4 times tonight. You're going to have to tune in next week Thursday and ask it again. It's too long to answer again. What can we do to reach 5 million in 5 years? Koketso, you make an appointment with me and I will advise you guys with regards to what you can do. Nancy, thank you so much, Corey. You know how to explain the layman's terms, which is exactly what is needed. That is honestly what I hope that I get across every time, layman's terms, because I think too many people try and make use of fancy words and then nobody understands them. I don't sometimes understand some of it. Any case, okay, thank you very much, everybody. Thank you very much for a great evening. Next week, Thursday, same time, same place. In the meantime, in my portfolio is my WhatsApp and my website. If you want to set up a one-on-one or you want to get some more advice, you're welcome to send me questions there. I try and answer everything, and we set up appointments for people who want it. Keep well. Have a wonderful evening. Have a lovely rest of the week. All the best. Keep well. Bye-bye.